Monday, April 15th, 2019, Maneco 64, home of alternative economics and contrarian views. So this morning I just want to look at the markets and also the longer term picture for the stock market, precious metals, look a little bit at the bond market and see what it's telling us at the moment. Look at some of the headlines and how they relate to things in general, geopolitics, the dollar, everything out there, the deep state and what's going on. Just one thing I would say about golf. Some of you might know that I'm a golfer. I've been playing golf for almost 40 years. I started out in 1980 when I was about 15. I know some of you probably think it's silly. It's like bread and circus. Yeah, of course, sports can be bread and circus. It does distract people, but it has never distracted me because I do enjoy my golf. It is a hobby, and so what's golf got to do with the markets and this video? Just wanted to point one thing out. Some of you might know that Tiger Woods yesterday won the Masters, and it was his first major championship win since June 2008, and which is a very long time for golf, especially for someone who was expected to beat Jack Nicklaus's record of 18 major championships. Well, Tiger Woods was up to 14 major championships after winning the U.S. Open at Torrey Pines in San Diego in 2008. And he was 32 at the time, and golfers reach their peak in their 30s, and he hadn't won a major championship since then. So the fact that he won another one yesterday was quite big. It was also his 5th Masters. And he's now 3 major championships behind Nicklaus. But in terms of the economy and the market, it could be an omen because the last time Tiger Woods won a major championship, a few months later, we saw the collapse of Lehman Brothers, the culmination of the crisis of '08, which was in September. Could it be that this time around Tiger Woods wins his first major since then, and we could see in a few months' time some kind of financial market, economic, or currency crisis? Very possible. Who knows? Just wanted to put that out there. So right now it's 7:31 a.m. London. Let's see what the markets are doing. Spot gold and silver are still treading water here. Gold is below $12.90 now. It's down $2.60 at $12.8770. The low has been $12.8685. The high $12.9220. Spot silver $14.93, down about 4 cents. The low $14.91 and the high $15.01. So yeah, right now sentiment is very depressed for the precious metals. Should that put you off? As I always say, precious metals have the best track record in, as money over millennia. They maintain purchasing power over millennia. You should, yes, it would be nice if they reflected the kind of situation that the system is under. It will act as a barometer, in my opinion, eventually, of all the debt, all the paper debt and credit that has been created out of thin air. It will reflect real value sooner or later, in my opinion. So we need to keep patient, maybe a bit like Tiger Woods. He didn't give up. He's finally won again. The Dow is not up 10,000 today. Yeah, I saw that Donald Trump said the Dow should be up higher than 10,000 points higher. Maybe he meant that the Dow should be at 10,000. But well, you know, yesterday I did a live stream. I spoke about some of the symptoms of hyperinflation and currency debasement. I looked at this book here by Adam Ferguson, When Money Dies. It's about the hyperinflation in early 20s in Germany, in Austria, that part of the world after World War One. And one of the symptoms is that everyone thinks they're really clever, that they're getting rich, and the stock market at the time was also going up a lot in those countries, but it wasn't a pretty sight eventually. What about the S&P? Well, S&P is unchanged, 2906. Well, actually down 3/4 of a point. So, and the Nasdaq is also 100 is only down 4. So fairly quiet here so far. Currencies, the pound still very steady, considering where, you know, the volatility we've had. It's at 130.88. It's up 0.15%. Euro is up 10 pips or 0.1% at 113.10. And the dollar is down slightly against the yen at 111.93. Dollar unchanged against the yuan, 670.80. What about the crude oil? The Brent crude is down 0.2%, 71.15, and WTI is down a third at 63.76. So still quite steady energy market there. Bond market, very steady as well. I have noticed that the curve has disinverted here a little bit from 3-month to 7-year. We're now at a positive 3 basis points. We're at 243 in the 3 months and 247 in the 7-year. And the 10-year yield has backed up quite a bit. It's rallied quite a lot recently from, I think the low was in the 230s, 236, 240 thereabouts, and we're now at 256. Well, you know, that's the problem now. What if the stock market stays quite elevated and yields start back, you know, going back up, or the stock market goes up? Does that mean the Fed can now start hiking again? I think they've got a big problem in their hands. The central bankers, they've cornered themselves. They're at the mercy of the stock market. I think it was Donald Trump who recently made a comment, the Fed's job is to keep the market high. Is he dissing the Fed? Kind of, I think. So let's look at some charts and the technical picture, longer term charts. First, let's look at the S&P and these rising wedges here. I've spoken about that recently. Rising wedges are usually kind of counter trend rallies in a overall bearish or downward market. I know the chart doesn't look like it's going downward here because it's been quite volatile. It's like since the beginning of last year. But let's just go through it. So we had the Dow making an all-time high in the end of January 2018, and then we saw a massive correction lower, kind of like a crash. And then we saw a bit of consolidation and this move higher in this rising wedge. Rising wedge is usually a bearish formation. It means that the trend will reaffirm itself, and lo and behold, it did reaffirm itself last October, and we had another crash that went lower than the crash from 2000 earlier in the year. And now we've had another rally and another rising wedge formation, and as you can see here, it looks like the bottom of trend line of that rising wedge is breaking right now. I know the markets look very calm right now and that things are steady, but you never know. I just wanted to warn you about this. So, and if we are going to break down again and see another crash, I would say that the low will be lower than the low we saw on Christmas Eve last year. So that's the S&P. Let's look at spot gold. Well, spot gold here, I'm also looking at the weekly chart, longer term chart. This goes back to around, let's see, October 2013. Longer term, as you can see, we're totally in the range in gold. It's not going anywhere at the moment, and we know very clearly where the Maginot line is, so to speak, for gold. It's at 1375. And below, I think 1280 is a key support. Why do I say 1280? Well, because if you look at, I've looked at this before, it's a very key retracement level from the low back in 2000 or 2001, around 250, and the high in 2011 at 1921. 1280 is a key level there, longer term. But unlike the S&P, we're forming a falling wedge, which is the inverse of the rising wedge. So it's like a consolidation pattern, a bullish one from an upward trend, and it should usually resolve itself on a move higher. As you can see here, we're still within that falling wedge. We could go down to touch the bottom line, which right now is, let's say, around 1277, around that 1280 level. And above right now, that line on the weekly is around 1301. So we're getting closer to like the apex of that falling wedge. So even though things are very quiet and calm right now, I think below the surface there's some problem brewing out there for the overall market. So I just want to look now at some of the headlines that I've seen this morning and look at Zero Hedge. Some interesting headlines that I think, let's see here. One that sounds a little bit counterintuitive. It's from economist Steve Keen. I have listened to his stuff before. Don't agree with everything he says. I'm just looking at this headline. I'm not going to look at the story. It says why the death of King Dollar would benefit American workers. And I kind of agree with that headline. And why? Well, because I think right now the dollar, since 1971, when the dollar was disanchored from sound money, America's been going on a spending spree, on a borrowing binge, and if anything, it's wrecked the economy. It's wrecked the industrial base of America. It's wrecked the middle class, and it's it's kind of made Americans have a lot of bad habits, a lot of borrowing and spending, and I think it would make America honest again to have a currency with which they actually cannot just print it and buy and borrow anything they need. That they actually have, and that goes for the government as well. The government has been able to borrow and borrow with no worries for deficits, right? Deficits don't matter. So that's why I think that's my view on that. I'm not going to look at the story. Caitlin Johnston warns Trump supporters are hurting Assange with their 4D chess talk. Yeah, I guess this is all the talk of Q and that he's got a plan and that you need to trust the plan. I kind of agree with that comment. I'm not too sure about Trump. He might have good intentions, but right now, the globalists, the deep state, they've got something on him, and he's doing, what they're telling him to do. Of course, he's doing some other things that they don't care, that are probably not bad. But all in all, I think he's made 180-degree turns on a lot of his promises. Well, one hedge fund CIO says forget the yield curve, China is all that matters. So he thinks looking at the Chinese economy is what matters. I personally think the yield curve is still important. So there you go. Not much else to report this morning. Things are fairly quiet. Is it the calm before the storm? Who knows? One thing's for sure though, at least you've got time now to prepare yourself over the long term. Protect yourself financially through precious metals, through getting out of the system, through trying to get out of debt. Try not to play the game that they want you to play. You know, the game of spending and borrowing. And I know it's difficult for savers nowadays to save in paper money, but save in precious metals. I know it's frustrating, but it will protect you and will be rewarding at the end of the day. If you enjoyed this video, make sure you hit the like button. If you have not subscribed to the channel yet and you enjoy my videos, think about subscribing. Share it far and wide with people you think might enjoy this content. Don't forget to hit the little notification bell above to be notified of my new videos. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great start of the week. And I'll talk to you later. Take care. Bye.